Welcome back to another TradeOut's technical analysis tutorial. This is Introduction to Risk Management, quite possibly the most important learning module that I'm going to do, to be honest with you. This is literally the foundation of being a profitable trader. It's very important, very critical to understand. If you are a new trader, I would highly recommend watching this several times, taking really good notes. Because this could be the difference between you being profitable and not being profitable. So again, very, very important learning module to pay really close attention to. And that being said, let's get to the video. And as usual, here's the disclaimer. Please pause the video and read this entirely. All right, so in this video, we are going to talk about the basics of risk management and the 4 critical things that I believe every trader must master. So first off, you have your entry, you have your invalidation or stop loss, you have your targets, and then you have your risk reward or RR, right? We're going to get into later in the video. For those of you in VIP, you obviously have heard about this quite a few times, but we're going to really get into some details in this video. Again, this is kind of the basic video. But in the VIP tier or the advanced series, so again, for those of you in VIP, pay close attention, or anybody aspiring to be in the VIP, we're going to also be learning about tools that we use to manage our risk. That's incredibly important. So how do you manage your risk? We're going to learn specific trade strategies to protect your trading capital. That is incredibly important considering, again, that's why we're here, right? It's about making money and protecting what you got. So those are 2 very important skills. Obviously. And then finding the invalidation level or your stop loss that makes the most sense, right? So it's not about just picking a random stop loss level or picking the most obvious stop loss level that's very likely going to get hunted and you're going to get stopped out before price moves the way that you thought it would, right? So again, it's not about finding the obvious invalidation level. It's about finding the one that makes the most sense for your trade setup. So that's very important, something that we're going to cover. And then obviously, real trade setups that help you develop your risk management skills through future live streams or videos. That's something that I discuss in almost every single live stream or video that I do. So just getting more exposure there and working on your skills, that way. And then how to identify appropriate targets to take profit using technical analysis. So this is, very, very, very important. It's kind of the whole deal, right? So again, risk management, the 4 different parts that I talk about, and you're going to incorporate the technical analysis that you'll be learning in the beginner videos and in VIP and the VIP live streams. That's going to become a very important part of your foundation, right? And if you're in VIP, again, you've heard me say that word a ton of times. That's really what this tutorial, what this module is about. It's about continuing to build the foundation that we've started on and using this to work your way towards becoming a profitable trader. So very, very, very important stuff. So again, the 4, right? Going forward, we're going to be talking about this every single video, every live stream when we're looking for trade setups live. We're going to be using these terms. We're going to be, everything that you learn here is definitely going to apply later on. But again, you have your entry, you have your invalidation or stop loss, you have your target or take profit. And then what is the risk reward? So that's the most, very, very, very important. I'm going to show you how to calculate that here. So what's your entry? That's pretty obvious, right? It's the price at which you decide to enter long or short, basically when you get into your position. So getting a good entry, should edit that to say great entry, right? We don't want just good entries. We want great entries. But it's important for obvious reasons. But it's really the foundation of your trade setup, okay? Everything else is based off of your entry. So where you're going to take profit, if it's even a good trade to begin with, right? If the risk reward makes sense, it's really based off of where you enter, okay? And your entry should obviously be based on some form of technical analysis with supporting confluences to enter at that specific level, right? You should have a reason, very good reason, to take that trade. So that's your entry. It's very important. So your invalidation or stop loss. Now, Your invalidation, so again, it's kind of where you're wrong on your trade, right? Whatever idea you had for taking the trade, whatever your thought process was in saying that this trade setup is something that I think is going to work out, your invalidation is where you're wrong, right? Where you think that you're wrong and that you should exit the trade so that you can protect the rest of the capital that you have at risk, right? So again, your invalidation, your stop loss, it's basically where you're wrong on your trade and where you're going to look to exit that trade. And you're going to take your loss and then move on. It's essentially what that means, right? So this is perhaps the most important part of your trade setup to identify and stick to unless circumstances change, right? Again, for the most part, and kind of what I mean by that is you really want to have a really good idea of where that invalidation level is, and don't let emotions, which we're going to get to in future, and later on in the modules, but people have a tendency sometimes to, if you get getting close to your invalidation, people will just let it go. And what I mean by let it go is they'll just stay in the trade because they're like, oh, I already lost this. I don't think it can drop that much further. It's probably going to turn around, and then it just go, the invalidation that they thought was the correct invalidation and a very good time to exit the market with minimal loss, right? But people will just have a tendency to just let things run, and before you know it, you're double-digit % down on that trade, So again, your invalidation, your stop loss, it's very important not only to be able to identify where that is, but stick to it in your trade setup and let the trade play out how it's supposed to play out, win or lose. So your take profit level, obviously another obvious one, but your take profit level or levels are where you would look to exit either part of your position or all of your position to take profit, right? To harvest all the profit that you made on that trade. So those levels are your take profit levels. And take profit levels should also be based on some form of technical analysis with supporting confluences to exit at that specific level. So is there an SR level there? Is the VWAP there? Is there a golden pocket there? Like, there needs to be something telling you, and not just some random place where you're gonna just, okay, I've made 2%, I'm gonna take it out, or I'm gonna 20%, I'm gonna take it out. Like, there has to be a reason for you, a technical reason to take profit there. So that's really what we want to focus on. And finally, you have risk reward. Quite simply put, this is how you measure if a trade is even worth taking, right? And you'd be surprised if you do this every single time you're going to take a trade. This really highlights if the trade is worth taking or not. Like, you'd be surprised how many trades that you would have taken, right? So if you're not a profitable trader and you're trying to figure out why that is, this is a very good exercise that I encourage you to do, because I think it will open your eyes to see like why you're not profitable. Like, I think this is a big part of it, right? So obviously we're going to get into this a little later in the video, but again, the risk, like, is the risk worth the reward? That's what you have to figure out. So it is example time. What I'm going to do is I'm going to look at a few charts. We're going to find some fake entries, essentially, right? So please do not take these trade setups if you're watching this. I'm not going to do, like a super thorough technical analysis. We're literally just going to find a few potential spots where we could take a trade, and I'm going to show you how we set our trade setups. Like, essentially the steps that we go through, how you find your entry, how you find your take profits, how you find your stop loss, and essentially, like, is the trade worth taking, right? So again, these trades are not, like, I'm not going to do, there's probably nothing I would actually take, but I did want to try to do a few examples for you. That way you can see how you can put this to work for yourself. All right, so we're going to switch it up a little bit. We're going to go into traditional land. So I'm going to do a stock. Typically I do crypto, but I'm going to do a stock. In this case, we're looking at Caterpillar right here. And I'm going to look for an entry. But the main thing is, again, I'm not even going to take this entry, and this is probably not even going to be that great of an entry to begin with, but this is just for practice, okay? To go over the risk management basics that we learned earlier in the video. So the first thing that we need is an entry, all right? So let's just hypothetically say Like, is where we're sitting right now a good entry? I'll tell you, no, not really, because you're literally sitting right on top of cloud. Okay, so if you're looking at this from an Ichimoku perspective, you're literally sitting on support. So this isn't really a great place to take an entry, right? I mean, you know, you have a bearish TK cross, price is sitting on cloud. This is kind of something that I would really probably stay away from. But let's say, just for the sake of this chart, that I'm going to turn these pivots off. Just for the sake of this chart, that you actually closed below cloud. All right, so let's say that you did. It's like, okay, so you could have a short trigger here. So you're going to come over to your tools. The two things that we're going to be using is the long position and the short position. Okay, so this is going to help you measure your risk reward. It's going to put everything on paper for you. So I'm going to select the short position, and I'm just going to put it right where price is right now. So you can already see that, zoom in a little bit. The red box is essentially where your trade is going to be in a loss if price is within. All right, so you're going to be underwater. If price exit the upper part of this red box here, that means that your trade stopped out at a loss, and you would be done with that trade. Vice versa for the green. If price is in the green section, that means that your trade should be in profit. If it exits touches or exits the very end of the green box here, again, this is where your take profit is going to be, then your trade should exit in profit. And that would be the end of the trade. So let's pretend that we wanted to take an entry right here, right now, because we think that we have a setup where price is likely to head lower. Okay, and I'm not saying it is. I'm just for the example of the video. So I want to enter right here. So where's my stop loss going to be? Where's my target going to be? So I'll tell you right now that my stop loss would probably be above this high. And typically, not a big fan of using lows or highs for stop losses on their own. But in this case, it is basically where your weekly Kijun is. So it does make sense to use that as a stop loss. So you can move your stop loss down just behind this, essentially where this high is. Because if price were to come all the way back up there and take this high out, I mean, sure, you have the potential of a swing failure pattern, which is something that we'll get into in later videos, but it wouldn't really look very good to be in a short position at this point. And you would probably want to reevaluate, because that means price is likely above cloud again. As you can see, the shape of the cloud here. So it wouldn't look very good to continue to be in a short, in my opinion, if that did happen. And then where would your target be, right? So we have our invalidation, we have our entry. So the third thing is you need your target. So again, this is another thing that's going to be based on your own technical analysis, right? But for this instance, I think that you have some decent confluence here for this weekly level, which is kind of aligning where the bottom of this cloud is. All right. If you were just going to do this really quickly, see if anything else lines up. So your 0.5 fib lines up really nicely with this general area. So I do kind of like that for a potential target. So again, let's say hypothetically this candle closed inside a cloud, which it did not, but let's say that it did. And then I wanted to look for a short entry here. So this is my trade setup. Again, my entry is going to be right here where price currently is sitting. My invalidation or stop loss is going to be behind Kijun, basically behind this high that was made right here. My target is going to be the edge of this cloud where this weekly is. Now we do have a value area high to be aware of here. That's the thing. So there is, this is a level of support that I would want to be aware of. But let's just pretend, again, to keep things simple, that this is ultimately the target that we're going to go for. All right, so I'll actually just hide this for now because this really isn't that important for the video. Okay, so here is your trade setup. So this is a short trade, meaning that we're shorting Caterpillar, anticipating, or hopefully, we're hoping that price is going to continue lower. That way we can exit our trade and profit. So the final piece, right? So we got the other three things that we need. It's plotted on the chart. We feel good about it. The last piece of the puzzle is to see what the risk reward for this trade looks like. does it make sense, right? Does it make sense to take this trade? So your risk reward is right here. So this number is 1.24. And what that means is essentially you're going to, like if you look at the percentages here, so you are risking for this trade 12.5% essentially. So you could lose if your trade exits in a loss and you let it ride all the way to invalidation, all the way to your stop loss. You're going to lose 12.5% on this trade, which is quite a bit. But if your trade if it's a winning trade and it hits your target, then you're going to stand to gain 15.58%, which again is 1.24 times your expected loss, right? If this does happen. So that's where your risk reward comes in. Now, for newer traders, I think that it's a really good idea to not take trades below a 2-to-1 risk reward, because if you're taking trades that have a higher risk reward, or essentially if it's 2-to-1, 3-to-1, 4-to-1, even 5-to-1 and above, you don't have to win as many trades to be profitable. Okay, so this is something that we'll get into later videos, but it's really important to understand. Now, let's say that and I've seen this happen a lot. All right, so I guess here I will put that. Let me see if I can find it really quickly. It's right here. So I'm gonna put this back on. Okay, so your value area high here, and I can't tell you how many times I've seen people do this. This will, like, so your entry will be the same, your invalidation will be the same, right? Hopefully not yours, but people that I see, and their target, they will literally be targeting this. Like, this is what their trade setup will look like. This is their entry. Their stop loss will be somewhere this deep, but they'll only be trying to target this. And if you look at the risk reward, it's 0.36. That means that you're risking 12.5% in order to only gain 4.46%. That's very bad in my opinion. That's very bad. And, you know, let's say that you took this trade and this was your trade setup. It doesn't mean that you're not going to win this trade. It doesn't mean that you're not going to, you know, like that. You might be right. But I'll tell you that if you take enough of these trades over time, you're going to lose money. Very high likelihood that you're going to lose money if if the trades that you're looking at have a risk reward of anything like this. Anything under a 1-to-1 risk reward, which that in itself, and what I mean by a 1-to-1 is something like this, right? So essentially you're risking as much as you could gain. All that is to me, and like obviously you know if you know when you trade enough and you feel really confident about a particular type of setup and it happens to be a 1-to-1 risk reward, to be honest with you, I still wouldn't bother. But you know, this is essentially a coin flip. It's a 50-50. Now obviously your TA could lean one direction or the other and give you a bit and give you your edge, right, for this trade to play out correctly, or to play out in your favor, I mean. But ultimately, again, I think if you take too many 50-50 trades, at the end of the day, like you're gonna have a much harder time being profitable, because you're gonna need to be right like that many more times. You know what I'm saying? Or you could take trades like this, where you're looking for better, again, right? So I'm just gonna like alter this just so you can understand what I mean. So you're looking for better entry. So let's say instead of here, maybe you know, since you got a bearish TK cross, so I have all these alerts. We just had a weekly close, so I have all these alerts going off on my chart. But let's say that you entered up here at where the weekly Tenkin is, and your target is this weekly. Okay, so your risk reward for this setup is 3.29. That's really good. Like, this is really good, right? So you can be wrong, you know, you can be wrong on these trades. Like, you could basically have a 40% win rate on this and still be profitable. if that makes sense. That's why I think, especially for newer traders, that when you're planning your trades, right, and don't just adjust this to try to make it feel okay. Finally, you know, well, I got look at this. I have a 7.8 RR on this trade. Like I'm this if price comes up here, I'm gonna take this short. Like that's not how you do this. I'm just doing this for as an example to essentially show you how to use this tool, right, to measure your risk reward. But what I'm saying is that it's better for newer traders most of the time to try to find the trades, right, that make sense from a technical perspective. Like it makes sense to you that like that the trade setup is a good setup, but the risk reward on it is something like 3-to-1. Because again, you have to win less of these in order to be profitable, right? That's the key thing that I really want you to take away when we're discussing risk reward. All right. So again, back to this. This is essentially the trade setup that we're looking at. It's a 1.24 RR. So it's a 1.24 risk reward. Not that great. So is this a trade that I would want to take? Probably not, to be honest. Like, you know, I would probably like if I had to be in a trade and this was the absolute best trade setup that I could find, then I mean maybe, but the thing is there's hundreds and hundreds and hundreds of charts. I mean, between crypto especially and stocks, there's so many other different assets that you can trade. I can just about guarantee you that there's going to be a better setup somewhere, right? So it's all about finding the best setups, and really, again, sticking to your technical analysis that you learn, but only employing like the best setups and the best risk rewards. Like that's, if you focus on that, that will give you your best chance to be profitable over the long term. So this, again, this is kind of, again, risk management basics. We have our entry, invalidation or stop loss. You have your target that you came up through your technical analysis, and now you know what your risk reward is. And to just recap the fourth one, because again, the other three are very simple to understand. The point that I want to make about your entry, invalidation or stop loss and your targets is that the main thing I want to say is you have to have those before you enter a trade. Too many people enter trades and they don't have an idea of where they're going to be right on the trade, where they're going to take profit, where they're going to exit the trade. Like people don't put enough effort or thought into that, and those are the people that lose money. So if you get anything out of this video, before we even move on to the advanced or the rest of the risk management series, you have to have your entry, you have to have your invalidation where you're wrong, so that you can exit the trade. Sure, you're going to take a loss. Like there's no one on this planet, to my knowledge, that has a 100% win rate. So don't think that you have to have 100% win rate. Okay, I literally just explained to you how a trader with a 40% win rate could be profitable. And it's all about risk management. It's all about your risk reward, that the trades that you're taking. Like you could have a less than 50% win rate and still be profitable, make a ton of money. Okay. The third thing, and again, really important, is you have to have targets. You have to know, when are you going to take profit? Like when are you going to realize the profit? That, right? Great setup. You got to have great trade, but you have to know when to exit too. Like when is a good time to take profits on that? And it's usually going to be at very important resistances or very important supports, right? Depending if you're long or you're short. But like you're going to want to take profit at those specific levels. And then lastly, again, the risk reward, the fourth piece of this is just understanding how this works, right? So this is a short trade that we went over. So it's not going to be that much different, but let's do a long trade just so you can see again, right, how you might want to approach that. So a long trade, I'm just going to use the same chart and just find some levels where I think, again, I would not take this, but I'm just doing this for video purposes, for learning purposes only. So let's say that, okay, so this was where our target would have been for the short trade, right? If we had a closure within cloud and this value area high wasn't here. So again, you can see why I wouldn't take that trade, right? But let's say that, I do think price is going to come down here. And if price does come down to this cloud, I think it's going to be really important support because you have some important levels lining up around here. So I want to go long, right? So price is nowhere near here, but it doesn't mean that you can't set up and prepare for, you know, like you can't set up and get your trade setups ready and set alerts here and prepare to enter this trade if price does indeed come down to your levels, right? So I have my entry or my idea of where I want to enter if Caterpillar does make its way down to this weekly level at 168. So that's my entry. So where am I wrong on this trade? So this is a little, again, like you're going to have to do your own technical analysis, look at your levels and see what you think, but I'll keep it very simple. And I'm just going to put my invalidation below this quarterly level. Okay. Again, not saying this is like the best place to, you know, maybe I'll put it like below this. I'll look over here below that wick. Again, this is just a guess. Okay. And so I have my invalidation, I have my entry. What's the third thing? Targets. So what am I going to be targeting? Well, let me turn Ichimoku off. So let's say that I think price is going to come down here. Here's my invalidation for the trade. Where am I targeting? So let's say I think that this could end up being a major bounce zone, and I'm going to target this upper quarterly level. Okay. So if I'm targeting this upper quarterly level, this is going to be my trade setup for this trade. And looking historically, I mean, yeah, so this is obviously, you know, pretty big move down here, but I mean, Caterpillar, pretty bullish chart, right? So it doesn't hurt to look for long trades when you see trends like this, right? But anyway, so let's say again, this is where I want my long trade. Price comes down and fills, hits my entry here. Again, anytime price is within the red, that means I'm underwater in my trade and or losing money. And if price exits below this red box, that means I'm going to hit my stop loss on my trade. Okay, and then I'll have closed it for a loss. Now, same with the, you know, anytime price is in the green, after your entry gets filled, you're in profit, hit the top of it, your trade, you exit that trade, and that's the profit that you're going to make. So what's the risk reward on this trade? Well, it's pretty good, right? So I'm risking 8.75%. So that means if I take the entry where it is and price goes through my stop loss here, I'm going to lose 8.75%. But if I do catch this trade and it bounces from this region and ends up taking hitting my take profit, I'll make 36% on this trade for a risk reward of 4.12. That is pretty darn good. So again, trade setup itself, it's just for, you know, this is just to visualize, like just to show you how you would want to set up your trade, why these tools are important and what they help you understand. So like, you know, if you have a 4.12 RR on a trade, that's really good, you know, like this, like, so if you're confident with your technical analysis as far as your entry, target, stop loss, and you feel good about that, then this is kind of the confirmation that says this trade is probably, it's a pretty good trade to take. Now, let's say you were only going to target value area high. Okay. So let's say that you were only going to target this, and this is where like you had a strong feeling again, lose value area high. Let's just say come down to this weekly, and then you're going to essentially play a bounce. Well, your risk reward on this trade is a 1.42. So again, like, do you think this is a trade that you should take? That's kind of up to you, right? But it's definitely not as, you know, the risk reward is not as good on this trade as something like this, right? So that's something to keep in mind. So yeah, that's essentially like how the long, so the long position tool is this one that we just did. The short position tool is the one that we used earlier. But I really encourage you to use this tool when you're charting and when you're preparing your entries, right? So when you're preparing your trades, to help you again visualize everything and make sure that you have the 4 important things before you take your trade. So with that being said, I hope you enjoyed the video, And we're going to get much deeper into risk management, obviously, but this is a very important basic level video that I think everybody should watch, to be honest with you. Like, this is definitely something that I think is going to help people long term. But we got a lot more about risk management to talk about. We'll see you on the next one.